I've been trading consistently for 6 years now, and I still remember all of the time and money that I spent consistently trying to grow small accounts and continuously failing. To be a great trader, you don't need significant amounts of capital or amazing huge risk to reward strategies to actually make money from the charts. All you need is one super simple strategy to focus entirely on and avoid all of the other noise. I can make between $200 to $1,000 a day with these 3 simple steps on the charts. And in this video, I'm going to show you guys the exact 3-step process that I followed every single day to go from failing funded accounts all the time to having consistent payouts and now being multiple 6 figures funded. This is the only strategy video you will ever need. Let's dive in. Okay, so the first thing that I want to go over is why most traders actually lose money. And most of the time that actually comes down to 3 things. That's either going to be the fear of losing, taking low probability setups, or failure to hold winning trades. Now, individually, let's get into what these all mean. So the fear of losing is not taking a trade purely because you have that constant worry that if you take this trade, there's always that chance it might lose. And in this video, this strategy is going to be completely mechanical, which is why you can completely remove this fear of losing, because now you know that everything happens mechanically without you having to use emotion on the charts, and whether it wins or loses has already been backtested for you 1,000 times to prove that this actually works consistently. And yes, you're going to face losses. However, that's part of the strategy as long as you follow it. There isn't a single strategy that has a 100% win rate. And without diving too deep into psychology on this video, I can't stress enough that you need to be comfortable with the fear of losing as long as your strategy has a good enough win rate and a good enough risk to reward to counter this. And this is exactly what this strategy provides. Now, the next reason that most traders lose money is because they are taking low probability setups. Now, what this means is you're going to take a setup that actually hasn't got much of a chance of coming in because you don't have many layers to the trade or many reasons for that trade to move in that direction. You have to consider a lot of factors, and that's why we've managed to balance it out perfectly so that you can avoid having too many things on your charts, way too many indicators and overcomplicating it, but also taking a completely low probability setup because you've not done enough analysis. And we've managed to whittle this down to the simplest amount of 3 steps so you can completely remove the fear of taking low probability setups, because that's not possible if you follow this strategy mechanically. And the last one is failing to hold winning trades. Now, a lot of people lose money because they will get in a trade that's actually moving in the profit in their direction, and they've placed a buy here, for example, and then what they decide to do is take the profits out here because they're scared of holding that winning trade because they see profit, so they think, I'll just keep hold of this. And that couldn't be further from the truth or further from the correct thing to do. That's exactly why within this strategy, we've set it so it's got a specific set risk to reward ratio, and you don't need to do anything. You set your risk to reward, which is 2 to 1, which we'll get into later in this. And we've proven with the backtested data that with 2 to 1s, you are going to have a solid win rate where price will actually almost always hit your 2 to 1, apart from the losses, of course. But it will win in the long term because this balances out risk to reward to ensure that your win rate and your risk to reward work together to prevail so you become a consistently profitable trader. Now, with that being said, let's dive into what it actually is and the first step of this strategy. Now, I'm sure as some of you guys might have been looking and seeing here, the first step is accumulation. So in a nutshell, the market can move in 3 directions. It can move downwards, like so. It can move upwards, and it can move sideways like this. And this right here is called accumulation. This is what we don't want to be trading because you have no idea of where price is moving. Here, you can see we're moving downwards. Here, we're moving upwards. Here, we have no direction. You can't bet on the market to move sideways. You can't do that. The market has to move up or down. So because of that, we know we don't want to be trading within this accumulation. However, we can use it to our advantage. And I'm going to show you that now. The first step is accumulation. We want to wait for price to do this, to move between these 2 markers so we can draw an area out where we can see price accumulating. And later in the video, I've actually got a specific indicator that does this entirely for you. So for the first step, you don't have to do absolutely anything. Then moving straight into the second step. The second step is waiting for manipulation. Now, manipulation in essence is a liquidity sweep. What is a liquidity sweep? A liquidity sweep is quite literally when you have points on the chart like this, for example, where price, there's going to be a lot of sell orders there. So because of that, price will come up, it will sweep this liquidity. So it'll take out all of them stop losses to generate liquidity in the market. And this is the manipulation because it will take this and then move in the opposite direction now that it's got all of the orders. So all we have to do for step 2 is wait for a manipulation or a liquidity sweep in either direction of this accumulation. Again, the first indicator will mark the box out for you of the accumulation. So you literally just have to wait for that box to be swept on the high or the low. It's as simple as that. And that's step 1 and 2 done by an indicator. It can't get easier than this. Now, moving on to step 3. Step 3 is distribution. Now, I'm sure some of you will have heard the phrase accumulation, manipulation, and distribution before because it can be a common thing to view in the charts. But here is how we have specifically niched it down to ensure that we can have the best possible win rate with AMD to get you the best results you possibly can from the charts. So, in essence, for those of you who don't know what distribution is, we've had our accumulation, prices move sideways here. And then we've had our manipulation because it's taken out all of these highs and it's manipulated to the upside. And now that it's got all of that liquidity, it's taken all of them orders out from the market. It's going to move downwards and distribute to the downside. This is a huge move. This is when you've taken all of this, so now we move downwards. And this is where the money can be made. Because this is where the money can be made, it is so important we make sure that price is going to distribute to the downside and it doesn't just continue upwards. So we need a double confirmation here to ensure that we actually know price is moving down and we can make bank. So what are them two things? This is the most important factor. So the first step in this is your market structure shift. If we're moving upwards on the charts, and then we have a higher high, higher low, higher high. We want to wait for that lower low than the previous, as you can see by the line here. We need this to happen to ensure there's a market structure shift and price is going to move in the opposite direction. This is a great first indicator. So in this case, we would have our market structure shift around here, as you can see, and in essence, it's the polar opposite for swapping from a bearish momentum to a bullish momentum. So price will be moving downwards like so. I'll just do it over here for you. Price will be moving downwards, and then we would sweep this high here. And there is our market structure shift to the other side. So we know when this line can be drawn, when we just have this high here, that's our market structure shift. So we can already have a good idea that price is going to do what it's doing here and move upwards continuously. With that being said, let's get on to the final step, which is your fib. Now, when price has a large leg down that creates the market structure shift like this, and the market structure shift happens here, we can draw a Fibonacci retracement from the top to the bottom of this leg to give us a golden zone. And I'm going to show you exactly what that looks like on the charts in 2 seconds, where this golden zone is, what our numbers are, so that you can wait for price to literally come, tap this golden zone, you enter your positions and you make bank. It is as simple as that. So let's quickly run through this again. Step 1, accumulation. We have an indicator to mark this for you on the charts. Step 2, manipulation. The first indicator also makes it clear where this manipulation is. So nothing to do, indicator does it. Step 3, distribution, which you don't have to do anything for apart from these 2 steps. So we've had our indicator tell us that we've done step 1 and 2. We now wait for a market structure shift in the opposite direction and a Fibonacci retracement. It's as simple as that. There is almost 2 steps because the indicator does step 1 for you. So with that being said, let's look at some super quick examples of what this could look like. So for example, on a Monday, you have your accumulation here marked out by the box and the indicator. We then have our manipulation to the downside on this leg. And then this is our huge shift up. In this case, we've had a massive shift. So we draw our fib on the low to the high. This is our golden zone. And we enter, we make bank. Tuesday, same, but opposite sides. We sweep the high here. We have our market structure shift here. This is the leg that we draw our Fibonacci retracement on. Boom, it hits the golden zone. We make bank. Same with Thursday. We sweep the lows. We have a market structure shift. We get the fib in the golden zone of this leg right here. And then we make bank. And finally, the last day, fib on this leg here. You get the gist now. We make bank. Let's get into some live examples on the charts so you guys can actually see how I trade this on a day-to-day basis. So as you can see, I have boxes drawn out for Asian session, London session, and New York session throughout every day. Now, That indicator is called Sessions by Lux Algo, and I'll pull up my settings so you guys can copy these settings. Super simple. This just essentially marks every box for every session for you because we use the previous session's liquidity. So with that being said, we have our previous session's liquidity here, and we're waiting for the high or the low of London session to be swept. As we can see here, the high of London session was swept. Perfect. So now we need to wait for, there's our stage 1, our accumulation. Here is our stage 2, our manipulation. Now we need our distribution. So our first step is to wait for the market structure shift. So we've had our higher high, higher low, higher high, higher low, higher high, and then lower low, because we've came lower than this previous. So let me remove all of these with that in mind. And if I drag up to here, you can see our market structure shift is just here perfectly. So now that we've had our market structure shift to the downside, it is this leg that's created that shift. All of these black candles, as you can see here, has created the shift. So we draw our Fibonacci retracement from the high of that leg, the top point, all the way down to the low, and then we drag this across. And then if I just zoom in for you guys to make it super easy to see, you can already see where price is tapped. So we enter our short position anywhere you want within this golden zone. I tend to go around the 0.7. As you can see, we tap that here. I then set my stop loss above the highs with a little bit of breathing room. So as you can see here, we've rounded it to 4 pips and we've cleared the highs, and then take profit at a 2-to-1, which is just here. Now, as you guys can see, if I really wanted to, with this amount of capital, you can actually hit, what's this? I could have hit almost a 5-to-1 with this. But we specifically aim to only take 2-to-1s because it guarantees our little piece of the pie. We want to get the low-hanging fruit, quickly take our piece of the pie, and continue to move onwards from there. So don't get greedy with this. Take your 2-to-1 and you will have the best win rate, the best strategy. Let me show you another example quickly before we carry on. Here is another example, as you can see here. So we have our London session liquidity. We can use Asian or London session for the liquidity, by the way, guys. But again, this is just another London example. And we have our highs here that we're waiting to break and our lows here. As you can see, the highs were actually swept here. So that is step 1 is accumulation. Step 2 is manipulation, which is this little leg here. So already, as you can see from that, 2 steps are done. Final step, wait for our market structure shift. We have our higher high, higher low, higher high, lower low down here. So this here is the leg that's created the shift. With that in mind, what we're now going to do is take our Fibonacci retracement, draw from the high to the low of this leg and drag it across. Again, you can see these numbers, 0.618, 0.7, 0.786. This is the area. I always go to the middle because this tends to give me the best win to risk to reward and win rate. However, it's entirely up to you. Again, we take our stop loss just above the high. So we have 7 pips here just to clear the high slightly. And I'll take profit at a 2-to-1, which is 14 pips. Boom. As you can see, again, I could have taken this so much lower to other points of liquidity, almost made a 5-to-1 again. Ridiculous. Again, I only take the low hanging fruit. I can't stress this enough, guys. Take your 2-to-1. Be happy with your 2-to-1. Risk accordingly. There is proof. There is profit. Again, fib retracement settings right here. When you have your fib retracement on the left, set up these settings. Simple as that. This is mechanical. You don't think about anything. You just literally set your stops at the highs or the lows and you do a 2-to-1. Let me give you guys one more example. Okay, so here, a little bit different. I'm going to show you guys from Asian session coming into London. So as you can see here, the accumulation in Asian session is actually a lot better. We have our sideways accumulation and the lows get swept right here. So this is our manipulation. So there is our sweep. There's our manipulation, accumulation here. Now we're waiting for a shift to the opposite side. So low, high, low, high, low. We have a new high that's created equal highs, so we won't wait for that. Low, and then a new high up here or up here. It doesn't make a difference. You can see that we've made on this leg is the leg that we've created that shift to the upside. So with that in mind, let's remove everything and we draw our Fibonacci retracement, this time from the bottom up to the top of this leg, and we drag it across. Now that we've dragged that across, we're going to enter a long position again on the 0.7 area. So we would have been tapped in on this black candle here with our stops just below the low. In this case, I probably would have just kept it at a 10 pip stop and then a 20 pip take profit because that's a perfect 2-to-1, which if I drag this down slightly is just There, you get the gist. And if we drag this across, you can see we absolutely smashed our take profit. Again, this is with even bigger pip ranges. With smaller, you could actually tighten your stops here to probably bring yourself to maybe an 8 or a 9 pip. And then again, you've made your take profit smaller, probably at London highs, better point of liquidity, works absolutely fine. Still 2-to-1, super, super simple. We do have a free Discord within the description. If you guys want to join, you can let us know what charts you're backtesting on there, how that performs, and also ask us any questions you might have about the strategy in more detail, and we can reply within that free Discord for you whenever you guys need. With that being said, I hope you've enjoyed the video, and peace.